Hello traders, today we're going to give our secrets on how you can trade M's and W's the right way. It will be easier for you to understand the content to be covered in this video if you watch the previous videos we have uploaded. Find the links in the description below. If you are new here, don't forget to hit that subscribe button and turn on the notification bell icon to be the first to watch when we upload any new content. You need to understand that trading requires one to have the right mindset and approach. Fear and greed is the major enemies when it comes to your trading. Know your objectives and make sure that you stick to them. Never go against your trading plan. Throughout this video, I will be defining a peak as an M or W. There's a lot of peaks one can trade or focus on, but in this business, it is wiser to focus on one type of peak, in this case, which is an M or W, but know that it is very patient demanding. The only time you should be looking to trade an M or W is when you have validated a peak formation. Remember, we only validate a peak after 3 levels of rise or drop, and it is very important that you stick to this point, for it will give you an edge to trade peaks in the right market context. Now, a lot of people have given up on trading the market maker way because they just trade anything that looks like a M or W, and that is a recipe to failure, for there's a lot of other factors that you need to look at before you consider trading an M or W. Let us look at an example. Now, as you can see, this is an AUD NZD H1 chart, and from this peak reset, as you can see, we're at the first day of drop into a consolidation. As you can see, this was a midweek reversal as this happened on a Wednesday. From that level, we went into a consolidation which took 2 days, and then we then had an ID 50 move or 50 bounce the next week on a Monday, leading us into the second level. As you can see, this is our level 2 into a consolidation, and on this Tuesday, this is when we then had our last level, which was our level 3, and then we had a peak formation which also happened on a Wednesday, and then we then reversed. Now, let's take a closer look at a W formation. As you can see, what we have, we've got the first leg. Now, what will happen is you would want to see the first leg pushing above the 13 EMA, coming back below, giving us the second leg, and then we'll have another close above 13 EMA, and this is when we'll look to enter. But what's interesting here on this W formation is we have divergence on our TDI. As you can see, our second leg was actually a market baseline bounce. Now, use the H1 time frame to validate a peak with clarity, but to minimize your risk, make sure that you try time your entries in a smaller time frame like the M15, but as you master that, you can move down to the M1 for a tighter stop. What you must master is catching the second leg with clarity at the right time. Now, let us look at how you can time an entry in the M15. Now, as you can see on this day, this is the same AUD NZD chart in the M15 time frame. And on this Tuesday, what we had is, as you can see, we had a 50 bounce on this day, an ID 50, first push, second push, and the last push, which was our third push. And this is where we had our first leg being formed in the New York session. And as you can see, as we pushed up, remember, this is towards the end of the day, so I would not advise that you try look for any entries at this time, right? There is variation to the theme, but remember, your timing is very important. And as you can see in this case, our Asian session does not have, much movement, right? So I would not advise that you look for trades in the Asian session. Yes, sometimes you might find, as you are back testing, that some trades did work out, but this is not the right timing or the right time that you need to be looking for trades, as this is our accumulation session of the day, of each trading day. Right, now from this first leg, as you can see, we had a push up. This push up broke the previous structure, giving us a higher high. Right, now from this higher high, we've got a pullback. Remember, we are not looking for any trades in the Asian session, and as you can see at the beginning or at the end of this Asian session going into the London session, this is where we had a very small W formation there with a nice bullish engulfing with a close above our 13 EMA, forming our second leg. As you can see, we've got some good divergence, right, on our TDI with our RSI crossing the signal line and the market baseline, at a nice base area. If you do not understand what a base area is, do check out our previous videos as I have explained all that. Right, now understanding the market context is very important before you even think of entering the market. I have seen comments in the previous videos and many think this does not work anymore, but if you watch our previous videos, it will be easier for you to understand the content that I upload. Our example was taken from the H1 time frame, which was from a peak reset down to the M15, but it was in line with the higher time frame levels and market structure. Let us look at an example from the H4 time frame to understand the intra-week levels. Now, as you can see, the example that I showed you guys right now from the peak reset was from this level. This is now the H4 time frame, but I want you to understand why that was a peak reset and why I took the trade. Now, as you can see in this H4 time frame, we had an H4 peak reset at this level, at this Mayo, as you can see, which is our 200 EMA. We've got the first level of drop, which was week 1, level 1 drop into a consolidation. As you can see, we've got a pullback right into the new week with a nice M formation, 50 pounds in the H4 time frame. Right, we're at the second week of drop, level 2 drop into a consolidation and another 50 EMA pounds, leading us into the last level of drop. Now remember, one level in the H4 time frame is actually 3 H1 levels, and as I showed you in our example, as we focused on the H1 time frame, this is why we then decided to focus on this. As you can see, this was a peak reset, right, which then led into our last level, giving us level 1, 2, 3, and then we had a reversal. Now here's our last example. This is another example. This is UK oil H4 time frame, and as you can see, we had a multi-week M formation. We had the first leg, and then we had the second leg in a different week and a week of drop. As you can see, you've got the first week of drop, a pullback, another week, another drop. So we basically had 2 levels of drop. Remember, variation to the theme, 2 levels of drop in 1 week. So you need to be trained, right? You need to know how to understand these levels, because the counting of levels is not easy, right? So we've got level 1, level 2 in 1 week, and then we had the last level of drop. And as you can see, at the first leg in a different week, and then another second leg, as you can see, and another different week, which was also a multi-week W formation. Sorry about that, I made a mistake there. Now as you can see, just so you understand, this week of rise, as you can see, this was a nice week of rise before we had this peak reset. Remember, as we had this cycle, we've got the 5200 crossover, so you need to keep an eye on this 200 EMA bounce, right, or peak formation around that area. So as I've marked down these levels in this color, orange color, right, these levels are actually our H1 levels. So I'm going to show you this in the next slide. Now as you can see, this is our H1 time frame, right? And as you can see, as we had that multi-day in the previous slide, this looked like a multi-week. It is a multi-week W formation, but then when we go to our H1 time frame, this is actually a multi-day peak formation. And as you can see, our peak formation was completed right here. As you can see, we had as you can see from these demarcations, from this red demarcation right here, this is actually Monday, Tuesday, Wednesday, Thursday, Friday. So this is a whole week of trading activity. From this area, we had our peak formation at the first day of rise, second day of rise into a consolidation, and then the last day of rise and a peak formation. As you can see, we've got the first leg. As you can see, we've got some trend acceleration, right? First leg, and then we had the second leg on a Friday, and as you can see, we've got the blue tracer inside, which is a very high probable trade. Now going to our M15 time frame, now what you will see is this was the first leg formed on a Thursday, and then we had the second leg being formed on a Friday. As you can see, we've got the blue tracer there, so this is definitely the dealer hitting the stops around that area. Right now, your confirmation right here would be a close below the 13 EMA. As you can see, this is a nice bearish engulfing, right? So this is a good entry. As you can see, we had some divergence as market has reached that extreme on our TDI. We had divergence. As you can see, this divergence is basically showing us the relative strength of this pair to the downside, right? As you can see, the first leg on TDI is actually higher than the second, but on our chart, the first leg is actually lower than the second leg, right? So a nice entry will be right here. But if you want to be more safer, follow your market structure. This push down here broke this previous structure, giving us a lower low, and as you can see, we had a pull back to a base area, right? This is a nice base area that we had right there, right? And your entry confirmation will be a close below the 13 EMA. As you can see, we also had divergence on our TDI, and then we continued going to the downside. Now, I hope I have provided some clarity to you on this topic. Do not be afraid to ask questions in the comment section. Leave a like if you found this video useful. Don't forget to hit the subscribe button and turn on the notification bell icon to be the first to watch when we upload any new content. For free signals and setups, make sure that you join our free Telegram group for free signals and setups in the description below. Money is the servant.